Today I'm here to talk about startup expenses and organizational costs or organizational expenses. During this time period, many entrepreneurs are venturing out and starting new businesses, and one of the questions that they ask CPAs often is what expenses or what expenditures that I had in the beginning are deductible. And one of the ones that's most important for us to identify and for CPAs to identify, but also business owners to understand, is that expenditures are incurred early on before a business actually is operational or has opened its doors and can actually accept business or start conducting business. Think of it in the context of a retail establishment. There's a lot that goes on prior to that grand opening. So the question is what about all those costs incurred from the time of inception to the grand opening? And those are the ones that fall into context of startup expenditures as well as organizational cost. In 2010, there were some legislative changes to our tax code that made it a little bit more flexible, or a little bit gave small business owners a little bit more leeway, which allowed business owners to deduct up to $10,000 of startup expenses in the first year in the month of which the business began operating. And that was phased out dollar for dollar once startup expenditures reached $60,000. So in essence, when it reached $70,000, that $10,000 immediate deduction was limited, and therefore the excess amount is deductible over 180 months. The same thing for organizational cost. Same rules, same amount deductible, a phase-out period of the equivalent amount, and then the amount deductible if it exceeds that over 180 months. One of the differences that distinguishes between an organizational cost and a startup cost is that organizational costs relate to the actual business entity. So generally these are going to be legal and accounting fees to draft corporate documents, to form the legal entity, to draft documents such as bylaws, shareholder agreements, partnership agreements, things like that. And then on the other end, startup expenses are things like salary paid to employees, rent, could be operational costs that are incurred but prior to actually having the doors open ready for operations. So those are two different types of costs that need to be categorized, and CPAs need to understand the new treatment under the new 2010 rules that are applicable going forward, and they can help better assist their entrepreneurs and business folks who start up businesses on the ways to best obtain a deduction for those, whether it's currently or in the future.